believe the regulation coming down because of this FTX debacle is going to be punishing.
Hey guys, welcome back to the channel. Today we have Mark Yusko forecasting the future of Bitcoin and the financial market for the rest of 2022. In the past 2 years, the Fed has printed 50% of all cash in Republic history, which, because the supply has been doubled, devalues the dollar by 100%. This has caused Bitcoin to go up by 100% in the last 2 years. Yusko says that earnings and growth are crumbling. He's also observed the housing prices rising over the past year, even though the quality or efficiency of the houses have not increased. The rise in prices are due to the money people use to purchase houses being extremely undervalued. This happened because the Fed has overprinted the dollar, and now we're starting to feel the full economic weight of it, especially with record high interest rates. Let's listen to this interview with Mark Yusko as he gives us his take on Bitcoin, the crypto and stock market, and what we can expect by the end of the year. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
This is the future of money. This is the technological future of truth replacing trust. That isn't going to stop just because the trust agents, the middle people, like extracting rents. Look, there's $7 trillion per year at stake. So let that number sink in for a second. $7 trillion with a T dollars per year extracted by the banking. I used to say cabal, but I heard that makes some people mad, so I'll call it cartel. That they extract rents in the form of late fees and service fees and transfer fees, and all those fees add up to about $7 trillion, and it's unnecessary. And we're going to capture all that wealth through digital assets and crypto, but it's going to take a while. It's going to take a while. The run on the banks that is happening is not the failure of the banks, right? It's banks are not meant to withstand runs. And the history of banking, right? We have 800 plus years of history around banking, and there have been lots and lots and lots of failures. And yet, most people listening to this have the bulk of their money in a bank. Some have a lot in crypto as well, but most people still have the bulk of their wealth in banks. Why? Well, because we trust them. Well, we trust them despite the fact that in the global financial crisis, a whole bunch of them went out of business. In the savings loan crisis, a whole bunch of them went out of business. In the Knickerbocker Trust crisis in 1907, a whole bunch of them went out of business. In the free banking era in 1840s, a whole bunch of them went out of business, and go back for centuries. And now we have a better solution, right? We're replacing trust with truth, which is what Bitcoin does. And again, you were talking with Dylan about this at the end. Gold didn't fail, right? Gold has been a perfect store of value, but not in the last 2 years, right? The price of gold is basically unchanged. It's up a little bit. It should have doubled over the last 2.5 years. Why? Well, because they doubled the money supply. Again, let that sink in for a second. We've been a republic for 246 years, and they doubled the supply of dollars, doubled in the 2-year period following the lockdowns in 2020. So it's not that gold got better. It's not that Bitcoin got better. 1 bar of gold equals 1 bar of gold. 1 Bitcoin equals 1 Bitcoin. But we don't price in gold, or we don't price in Bitcoin, right? If we did, right, the S&P 500, which everyone's all excited is rallying today, it's dead flat since 1997, priced in gold. Oh, no, market, made all-time highs. Well, yeah, because we price it in toilet paper. We price it in dollars. And so Bitcoin is up precisely 100% since 2020. But market went down 60%, 70% since the all-time high. Yeah, because people are greedy and people push prices away from fair value. The fair value of Bitcoin was never $69,000, even when it traded at $69,000. The value of the network at that time was closer to $30,000. Now, the value of the network has actually declined, believe it or not, for the first time, because people stopped using the asset. They hoarded, right?
Yusko says that because the Fed can print money out of nowhere, the value of that currency gets cut in two. This is because in the past 2 years, the Fed has created almost half of all the dollars in existence. This is leading to an excess amount of foolishness and leverage in the system and on Wall Street. We're already starting to see countries around the world experience major issues with big banks and consumers not having access to their money.
If the message that everybody wants for Bitcoin is we all need to hold our Bitcoin on a thumb drive and bury it in our backyard, we should all just go back to our old jobs because we already have that. It's called gold. We've had it for 5,000 years. And gold's actually better. It can't get corrupted by an electromagnetic pulse. It can't get corrupted by water. Oh, but it's on chain. But there is a chance that, all the nodes could go down. Not a high chance, but, gold, it is what it is. You can't melt it. You can't evaporate it. You can melt it and change its form. But what we need is for Bitcoin to become the base layer of money. That's why I keep saying why I believe it will be $100,000 and then $250,000 and then higher, because that's the monetary value of gold, right? There's $10 trillion of gold above ground. Half of it is in jewelry, chalices, gold leaf on the top of the Golden Dome at Notre Dame, right behind me. And all of that doesn't really count. The monetary value is the only money that exists in the world. Only one money in the world, gold, right? Everything else is credit. Everything else is a currency. Currency is backed by debt. Every central bank in the world has gold. Some of them have less than they used to because, as Dylan said, they moved off the gold standard and went to a fiat standard where they could devalue the currency faster because they had too much debt. But where is the gold going? It's going to China, which I believe will be the next global reserve currency. Eventually, it'll be Bitcoin. But in the future, Bitcoin wins because it is an asset that exists in the absence of a liability, which is what the definition of money is. And so it is superior to gold. Like if I had a bar of gold and I wanted to split it 3 ways, I couldn't bang it on the table and give you each a third. Too hard to do. And I couldn't stuff it in my computer and send it to you. But if I wanted to send you Bitcoin, I just punch a couple buttons and boom, I could divide, a Bitcoin into 3 pieces and send you both a third. Easy. So it does have advantages in being more portable and more divisible than gold. So I think it will eventually replace gold. 5 trillion monetary value of gold roughly equals $250,000 price per Bitcoin. Now, that won't happen tomorrow, but over time it's going to happen.
Yeah. According to Yusko, all economies and markets will crash as soon as the system supply of free money is exhausted. Yusko says that inflation is a fallacy that benefits only those at the top of the pyramid. We have the highest wealth and income disparity in the world because the Fed has been gradually removing money from the general public and giving it to the wealthy. What do you guys think about Mark Yusko's opinion on crypto being the future of money and how Bitcoin will play a role in 2022? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.